everyone, you've tuned into BNSN now, the weekend edition. I'm Mubina Kapasi.
Hi everyone, I'm Avinnash. It's been a stellar week for the equity markets, but today we'll be helping you out with all of your stock queries. So here's what's lined up today on the show. Bharat Financial and Manappuram Finance, that's what we'll discuss.
And later today, we'll be discussing Umanath Shetty's portfolio on the show.
Well, time to bring on board our experts. They'll be guiding us over the next half hour. Sarvendra Srivastava, independent market analyst, joins in to chat about the technicals, and we have Avinnash Gorakssakar as well, who is joining in on the fundamentals. Well, let's get straight up to our first query for the day. This has been sent in by email from Mohit Vijay Kumar. He's got two questions actually. First one's on Bharat Financials. He says that he's got 200 shares of the stock. He's purchased it at 767 and wants to know whether he should stay put or just book out with a time horizon of the next 6 months. Well, recently been under the radar for some comments on how business has been shaping up, and lots of brokerages have been reacting. Morgan Stanley, first up, maintains an overweight with a target at 950. They have gone on to say that the overall collection efficiency has in fact improved and that the pace of improvement has slowed down, but disbursements will pick up in February. They believe that the guidance, the FY17 AUM guidance has exceeded in Q4, and the collection trend for the next 2 months will be critical. Avinash, let's get in your thoughts. As a stock, do you think that Bharat Financial is good to have in the portfolio? What's your advice?
No, I think definitely Bharat Financial as a long-term portfolio choice is definitely good enough. I mean, in the short term, I think in the fourth quarter, we could see a little bit of softness on the company's performance as post the management's recent con call. I think there was very clearly a consensus that the margins and profitability in the short term could be getting impacted. But overall, if you see the structure of the microfinance market, I would believe that FY18 should be a much stronger year for the company in terms of the asset quality, in terms of the loan book growth, and in terms of the overall geographical reach for what Bharat Financial has. I would believe that over the next say 12-15 months, if the investor can hold on, he could be looking at a target price of 950. So I would suggest that he should hold on and definitely look forward for a better price upside.
Okay, well, you're already making money, but there is some more money-making potential in Bharat Financial. In fact, a target of 950 is what Avinash is looking out for. But let's understand the technicals then. And Bharat Financial has not moved much really in the last 1 week. Of course, we've seen the markets move, but it's not been able to catch up much. And yeah, pull the charts over to a longer term view from a 1 month basis as well. It's really just moved by about 1.5%. That's barely something to talk about. Though, of course, we have seen significant traction really on this stock, especially on the back of that merger news that has been taking the buzz and making the rounds with IndusInd Bank. But yes, let's talk technicals. And Sarvendra, what do you make on the charts for Bharat Financial?
No, I think clearly if you look at a slightly bigger chart or with a slightly larger time frame, I think this is a very, very high beta. In fact, financials itself is a space which is very, very high beta, super high beta. In fact, the stock fell almost 50% from 900 to 450 thereabouts in just 2 months when it was falling. And again, when it went up in around 1.5, 2 months again. So, and it's back at around 800 thereabouts. So, my sense is that this is one stock which you have to be very nimble-footed when you are trading, and you need to get those right exits as well. Because if you get it wrong, then in no time you are deeply out of the pocket and deeply out of the money. So my sense here would be that the stock is trying to attempt, and last 1 month, as you rightly pointed out, is more event-based and on news. But still, the stock has not gone anywhere in the last 15-20 days. So my sense is that definitely he should have a protective stop loss. And then the 6-month time horizon for this kind of a stock, again, I think that horizon is slightly kind of limited. But if I have to just gauge in that range, I think 940, 950 is doable. So there I will kind of concur with Avinash that is the kind of range that he should look at. And if he has a slightly longish horizon, then probably he should look at a break of 940 and 950 and above, from where the stock will probably break out into all-time new territory. So I think he should keep a protective stop loss since he already has got a trade and is already in some profit. There's no point exiting right now. Hold on to the trade. Around 940, I think, is where you should be taking in some profits, and keep a stop loss at 784, which is above his cost. So at least he does not lose anything. So 784 on a closing basis is what I would recommend as a stop loss.
Okay, be mindful, ensure you adhere to that stop loss of 784, because like, of course, Sarvendra was pointing out, there have been several ups and downs, which were, of course, event-based that we did see in Bharat Financial. But for now, of course, is a thumbs up from the technicals as well as on the fundamentals. Now, Mohit has a second query, and this one is regarding Manappuram Finance. He says he has bought 1,700 shares of the stock at about 100 rupees per share. and he wants to know whether to hold or sell. He has a 6-month time horizon, a fairly short one. Well, lots of news really on NBFCs. Remember that the RBI has actually restricted NBFCs on cash loans restricted to 20,000 rupees, and those can be disbursed above 20,000 rupees can only be disbursed above check, which is mostly in line with the government's strategy to really reduce cash transactions post demonetization. Of course, the on-ground impact is something that we'll have to assess with Manappuram Finance. But yes, Avinash, this is the second NBFC that Mohit holds in his portfolio. What do you make of Manappuram Finance? Do you like the fundamentals?
Yeah, I think as far as Manappuram's basic finance business model is concerned, it continues to be extremely robust. In fact, the Q3 numbers have been extremely strong, and despite the fact that now cash disbursements amounts have been cut down, I would believe that slowly most of the demonetization impact has now started wearing down, and probably the full impact would be clearly, I mean, from the cash to the check payment related issues would be disbursed, would be cleared possibly in the year FY18. As far as the loan book growth is concerned, asset quality is concerned, I would believe that the stock definitely presents a good risk reward opportunity, probably a target price of around 125 to 130 if the investor can hold on for the next 12 months.
Okay, seems like the fundamentals are definitely intact. Let's get in a glimpse of the technicals. And, what do you think really would be the important level to watch out for on Manappuram? Do you think that this one merits a hold on the technicals, Sarvendra?
No, I don't know. He bought it in October, November 16, or he's kind of bought it into this pullback. But in both the cases, kind of he's got and bought the top actually, very close to the top. He's got 105 was the high this time around, 106 point something thereabouts, 107 thereabouts to the top last time when we were there in middle of 2016. So my sense essentially is that we've kind of got if you look at a slightly longer term chart, I think the risk of this stock again being a high beta and being from the financial space, I think the positioning is wrong, even though the stock could be right, but he's got it wrong in terms of the price. Now, my sense here is that close to his cost price, he should exit, because the stock is in that zone where it is threatening to kind of make a larger double top, triple top formation if at all it pulls back. So my sense is that he can right now hold, but around his cost he should exit, and only buy once the stock decisively breaks past 107, 108 on a closing basis, or at least on a weekly closing basis, and then this stock would go in for a free run and get you those 20, 30, 40 points on the upside. But till that is not happening, I think he's almost closely gone and bought a top here. So exit on a pullback, and in the meantime, when you're kind of holding that stock, keep a stop loss at 84.
Okay, a bit concerned in relation to the cost price at which Manappuram Finance has been purchased, but that's a view coming in on the technicals. Let's slip into a short break, but of course, when we'll be coming back in our portfolio segment today, we'll be discussing Umanath Shetty's portfolio. Don't go anywhere. Welcome back. Still tuned into BNSN Weekend.
Well, we've got our portfolio advisor segment lined up. We've got Umanath Shetty, who sent in the portfolio. 69 years old. He's from Karnataka and got a whole load of stocks with a 6-month time horizon. So let's get straight to it. First up, there's Walkhard, 20 shares at 1,200 rupees. He's got Bajaj Finance at about 1,060, close to 20 shares yet again. A small quantity of Thirumalai Chemicals, 10 shares at 750. So far, so good. He's making some money on the last two stocks. Moving on, there's HCC. He's got 200 shares at 37 bucks. Century Textiles features on the list. 5 shares purchased at 890 rupees. Aurobindo Pharma, 725 is the buy price. It's close to 5 shares. He's losing out on that investment. He's got Grasim as well, 5 shares at 1,021 rupees. Moving on, Future Enterprises at 17 bucks. And then there's Punj Lloyd in the portfolio. 100 shares purchased at 32 rupees. 5 shares of Strides Shaso, and he's got that at a level of 1,070. And finally, Hindustan Zinc, 25 shares at 290. Well, a diversified portfolio is definitely the way to describe this one. He is making some decent money on individual stocks, but how can he build up on his capital? How can he even better the kind of returns that he's making? Well, Avinash, for that we turn to you. So let's have your advice on the first three stocks. Wockhardt is what he holds. There's been a little bit of trepidation on the overall pharma space in light of all of those US FDA concerns. What's your prognosis? Bajaj Finance, what's the view? And Thirumalai Chemicals at $750. Do you think it's a good call?
Yeah, I think as far as Wockhardt is concerned, I would believe that it's a very volatile counter, and I think rather than Wockhardt, I think he should look at a stock like Aurobindo Pharma. Aurobindo Pharma should give him decent returns, and I think I would suggest him an exit and buy into Aurobindo Pharma, where in the next 15 months I expect a target price of around 1050. As far as Bajaj Finance is concerned, another good quality stock from the NBFC space. He can hold on here. He could expect a target price of around 1300 here. And the third stock, Thirumalai Chemicals, I would suggest that rather than putting his money on the commodity chemical space, he can put his money on a pathology company called Thyrocare Technologies, which trades at a similar kind of price. Here he can expect a target price of around 950 over the next 12 to 15 months.
Okay, you may consider replacing Wockhardt with Aurobindo Pharma. Not exactly convinced on the fundamentals. Bajaj Finance is a hold, and there's Thyrocare, which Avinash says that you may consider adding in your portfolio instead of Thirumalai Chemicals. Moving on to the next three stocks, there's HCC, where our viewers making some marginal money over there. He's purchased it at 37 rupees. Century Textiles at 890 rupees, which is of course a big gainer for him. And lastly, Aurobindo Pharma. Well, Avinash, you've already given a thumbs up to this one. So what's your view on the first two stocks?
No, I think as far as HCC is concerned, I think he should hold on. The company has a very decent order book, and again, a lot of cash on the company's books is going to come back, especially from the government in terms of the older recovery. So here I would suggest he should hold on. He could expect a target price of around 54. And as far as Century Textiles is concerned, we have been hearing reports that the paper business is going to be hived off. Some amount of debt on the balance sheet also is going to be cleared. More importantly, a lot of real estate is now going to get monetized, and I think in terms of rentals also, the company is well poised to now make recovery of its lower parallel kind of unit. So I would believe that the core business will definitely grow at a steady pace, and I think he should hold on. He should look at a target price of around 1150 for Century Textiles.
Okay, there you have it. That's the view coming in on some of the other stocks. It seems like these are safe bets to have in your portfolio. For now, it's a hold. Let's move right on. I missed out SRF, by the way. He's got that stock at about 1545. Let's get in your call then, Avinash, on this name. Grasim, do you reckon that it's a good large cap to have in the portfolio? And he's making some decent money on future enterprises. Do you think that it's time to buy more maybe?
I think yes. I think clearly in terms of SRF as well as future enterprises, he can hold on. For SRF, I would suggest that if he can hold on for the next 12 to 15 months, he could look at a target price of around 1750. For future enterprises, I would suggest that he's already made a decent profit, but if he can hold on for the next 12 to 18 months, he could look at a target price of around 30 rupees here.
Okay, that's the view coming in on those three stocks. In fact, SRF, Grasim as well as future enterprises all receive a thumbs up from Avinash. Let's talk the next three stocks then, and Punj Lloyd is there, which he's purchased at 32 rupees. That's a bit of pain point for him. The Strides Shasun at 1070, and lastly from the metal space, it's Hindustan Zinc at 290, where he's making some marginal money. Avinash, come in on these three.
Yeah, I think as far as Punj Lloyd is concerned, I would believe that this is not a fundamentally strong company, and we have been seeing the company recording losses almost for the last 2 to 3 years. In place of Punj Lloyd, I would suggest him to get into a specialty chemical company called Bansali Polymers. Here the company makes ABS and has been doing pretty well over the last 6 to 12 months. And our sense is that this mid cap stock can give him a better risk reward ratio compared to Punj Lloyd. He could look at a target price of around 38 here. As far as the other two stocks are concerned, typically as far as Strides Shasun, I would say that this is also a frontline pharma company. Post the merger with Shasun, I think the product base and the kind of pricing benefit is definitely going to come in, and FY18 should be a much better year. He could look at a target price of around 1300 here. And as far as Hindustan Zinc is concerned, I think again from the metal space, this stock has actually moved quite significantly, and I would suggest that if he can hold on for the next 6 to 12 months, he could be looking at a target price of 340. Not only expansion, but zinc prices globally have started moving, and I think in terms of expansion, the company seems to be well poised.
All right, that's the view coming in on the overall portfolio. Quite a few chops and changes. I hope you've taken note of Avinash's advice. Do remember, though, that this is a model portfolio. Please consult your financial advisor if you're taking any investment decisions. On that note, we take a quick break right here on the show. Do stay with us because we've got views on the markets and top wealth creation and technical trading bets coming up. Welcome back. This is BNSN Weekend.
Okay, and let's focus in on the markets. And that is something that has been the cynosure of all eyes this week. It's been an eventful week, really, and it's been a week where the Nifty has been able to clock in its record high. As you can see on your screens, 2% and counting, or rather 2% and higher for both of these indices. That's been clocked in by the market. So yes, a very, very strong move coming in. Now, while the Nifty has finally been able to shop firmly above the 9,000 mark, the Sensex unfortunately has not been able to still touch that record highs. But nevertheless, across the board, all of the indices have been able to touch their record highs during the week, be it the mid-cap index, the small-cap index, the banking index. All of these indices have been able to touch record highs. But let's talk a bit more about the markets with our guest then. And first up, Sarvendra, your take on the Nifty. A lot of analysts are still saying that there is more leg left in this rally, that you should still not unwind your longs. Do you agree?
See, I think I was from the other side of the camp at around 9,000, where I kind of looked at a slightly contrarian stance that what we expected there was that we expected that there would be a correction going forward into the markets, but that has not come, and with the gap of the Nifty has kind of broken out. So now, as long as this gap area is being held, which is close to that 9,000 mark, so as long as we don't slip much below that 9,000 mark and that gap is intact, I think it's around 8980 thereabouts. So as long as that gap is intact, my sense is that yes, I would now tend to agree that as long as that gap area is being held, the index could have more legs. But again, I think today we kind of did those targets, initial targets at 9180, 9200. Those were my expectations into this breakout. So I think those targets have been done. The internals of the market into this breakout are not that exciting. They are not bad, but they are not good as well. So we've got a kind of a neutral breakout where if you look at a slightly larger universe like a NSE 500, then around 30-40% of the stocks are performing. Into a new breakout, ideally I would have loved to see around 60-70% of the universe performing. So my sense is that if that has not been done till now, probably over the next few sessions, that should start happening, which means more and more stocks should be participating now going forward. So if that is the case, and if it continues like that, then probably yes, I would believe that 92 would be broken out of, and 94, 95 as a target on the upside can be looked at. But if that is not the case for the next 2-3 sessions, then I'm afraid that 9200 thereabouts, I think we would kind of stop at these levels and then probably pull back towards 8950, 9000 and be stuck in this 200-point range. So I'm not expecting much for the next 1 week, and I'm more or less expecting a range between 9000 to 9200 on the Nifty.
Okay, that's the view coming in, a little bit circumspect now. Avinash, what about you? Sarvendra said that he wasn't anticipating this kind of a rally with that much gusto. Did you anticipate this kind of a move, and what's the way forward?
No, I think post the UP elections, I think the markets definitely gave a very strong opening on Monday, and I think this was more or less on expected lines. Again, the Fed meeting which happened in this week also gave a pretty decent kind of dovish commentary. So I think overall, both the Fed as well as the UP election results actually pleased the markets. But now going forward, levels beyond 9250 would require a stronger kind of a news-driven push and a much higher liquidity flow. Although domestic liquidity has been quite strong. So I would believe that the markets could consolidate at the current levels. Maybe we may not see a big sell-off, but even incremental returns on the upside would now be a little slow. And probably some more triggers going forward, both domestic and global, would now would have to come to actually push the index beyond say 9250 odd level. So I would definitely be a buyer on decline, and I don't think that there could be a major sell-off on the markets which could see the markets going below 9000.
Okay, well, The two key events really for this week, the UP elections and the Fed event, are now behind us, and all eyes, of course, would be on earnings, GST implementation, etc. That's, of course, a market perspective coming in on the technicals as well as on the fundamentals. But what are some stocks that you could bet on to be able to enjoy a profitable trading session? Sarvendra Srivastava will give us his top technical picks. Sarvendra?
Yeah, I've got one trade on the long side. Since we are expecting a more or less a range between 9,090 to 100, I would kind of have a mixed strategy where one trade is on the long side and the other one is on the sell side. First one on the long side is Kesoram. I think clearly this stock merits attention just for the fact that the way it is kind of consolidated over long-term average over the last 2 months. We've been nicely bissing out in a range of around 135 to around 140, 145. Now today's session is the first kind of move where we've kind of taken that 145 mark out just a little bit, but my sense is that the momentum is now picking up, so this stock could probably head towards that 150, 155, 160 price area going forward next 4 to 5 working days. And if someone has got a slightly longer horizon, then I think this stock could be good enough till 170, 180 as well. So anybody trading this move has to keep a stop loss at around 139.40, and ideally that stop loss should be on a closing basis. So just keep their stop loss on a closing basis and look for targets in the region of 155 and with a slightly longer holding capacity around 170, 180. So that would be the long trade from my side. And the next one that I've got is a sell on Asian Paints. I think clearly this is one stock, as I was just mentioning on the Nifty, where stocks are not participating now back into this new high. So Asian Paints, the high was well above 1200 odd levels. The stock is still struggling at around 1070, 1080 mark. So we are just pulling back, and we just pulled back around 50-60% of that particular fall. So this is one stock probably which has got a weaker bounce compared to where the Nifty has already come. So my sense is that this stock would probably dip down. So I would look for a trading bias again, and for the next 3-4 sessions, I think the stock can fall back towards that 1045, 1046 price area. So keep that as a target going forward, and keep a stop loss at 1106.60 again on a closing basis.
Okay, so believe that the run-up, after that, you are likely to see some selling pressure kicking in on Asian Paints. Next up, let's get in Avinash's wealth creation picks. Avinash, what's on your radar?
Yeah, we like two ideas. The first one is on Finolex Industries. We believe that Finolex Industries, which is India's largest PVC pipe manufacturer, and plus which has got the second largest PVC resin capacity, should be doing extremely well in the coming financial year, that is FY 18 and 19. Our sense is that despite demonetization, the third quarter numbers have been pretty solid. The company posted a 70% increase in profits to almost 74 crores on the bottom line. And on a 9-month basis also, profitability has been sharply better as compared to the 9 months of last year. In fact, the cumulative profits for the first 9 months stand at around 221 crores. And for the last year, the company posted a profit of 238 crores. So our sense is FY 18 should be a much stronger year. In fact, for full year FY 17, our expectation is we could see an earnings of around 22-23 rupees. But post a good volume growth in FY 18 of 14-15%, and plus the agri segment, which is the company's main driver, is likely to do well. Plus whatever benefits have come in the budget, irrigation as well as rural India benefits should actually trickle down to the bottom line. So we have a target price of roughly 650 here over the next 12-15 months. And the second stock is a fitness company by the name of Talwalkar Fitness. We believe the company is in the midst of a restructuring exercise. It is demerging its lifestyle business and the gym business. Most importantly, our sense is that earnings have been pretty solid. The company has not got re-rated largely because of poor ROE and return on capital employed numbers. But post the demerger, this picture is going to change, and we would believe that in terms of valuations, the stock trades at roughly about 8 times FY 18. So this definitely looks attractive. We have a target price of around 300 rupees here.
Okay, Finolex Industries as well as Talwalkar Fitness are two stocks that you could look out for if you have a long-term investment horizon. Thank you so much, gentlemen, for joining us, answering all of our viewer queries, and of course giving us your top recommendations. With that, it's a wrap on this edition of Buy Now Sell Now Weekend. Thank you so much for watching, and have a lovely weekend.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.